All right, drink some water.
We should be live.
Mm. Are we live?
Yep, we're live.
Okay, I don't see it on Facebook. It just
10-second
says,
delay.
okay, I'm not going to worry about it. Hi, Nakia.
Hi,
Miss
Marsha. How are you?
Nakia. And Dr. Marsha, how are you?
How are you guys? No, you guys are we getting started before people actually come in, so there's not any like space of noise, I guess. It's quiet space. So
So why don't we get started and wait
yeah.
for people to join?
Mhm. Let us
Welcome,
know.
welcome, welcome, everybody, to another uh, Investor Chat, Wednesday evening Investor Chat.
Mhm.
And thanks for joining us. We've got a interesting topic to talk about as investors. And it's something that if you are investors, this is something that you should have
Yeah.
and that you should be using
Mhm.
every time you decide to invest. Okay, let's get started.
So the first question, what is that? What is it that we need?
What we're going to talk about today is a company checklist. And this is something that any investor and every investor should have and should be using. Once again, it is a company checklist.
Mhm. So, what is the company checklist?
A company checklist is simply a list of criteria that you want your company to have before you invest in that company.
Company.
It's just like if you were going out to buy a car or something of value. You know, there's certain things that you want that this car should have before you decide to purchase. Hello, Katrina, and I think that's
Keela.
Keela.
Hi, Katrina and Keela. How are you, ladies?
So we're talking about, as an investor, something that you should be having and using every time you decide to purchase a company, and that is the company checklist. It's simply a list of criteria that you want a company to have before you decide to purchase that company. That's all it is. We want to, and the goal behind that is to purchase quality companies.
Mm-hmm.
We want to purchase companies that we have some type of probability that this company is going to make us money. And so it's a list of things that the company should have before you decide to invest in that company.
Company. And you
Mm-hmm.
kind of touched on why it's needed for investors. So
Yes,
we're picking
because
quality companies, right?
picking quality companies, because the bottom line is this. When we decide to invest, we want to build a portfolio of profitable companies because we want to have a return on any money that we invest in.
Mhm.
We want to have that money make us money. And so we do that. Companies will do that one or two ways. They're either going to do that by us buying a company at a lower price.
Price.
That company becomes valuable and the price increases, and then we may decide to sell it at a higher price than what we bought it.
Mm-hmm.
So price growth is one reason or one way to make money. The second way to make money is dividend growth. So we want to invest in companies that will consistently give us
Yes.
increasing dividends.
Mm-hmm.
And so once again, we go back to, can this company meet criteria that we want so that they will make us money, either by price growth or dividend growth?
Mm-hmm.
Yeah. Yeah.
When's the best time for someone to use a checklist?
This checklist should be used to every time we invest in a company.
Mm-hmm.
Just pull it out and see if this company meets these the criteria on the checklist. And if it does, you feel more comfortable investing in it. Now, even though it doesn't have to be extensive, you don't have to have 100 questions on this list. It could be just, maybe 5 or 6 questions. And the other thing is companies aren't perfect. There's no such thing as a perfect company. So with your checklist, if they meet the majority of criteria on your checklist, that's good. If you've got like 7 things on your checklist and they only meet 2, move on. This is not a company that you want to invest in. But say you have 7 criteria on your checklist and they meet 5 of those criteria, then you're doing pretty good. That's a company that you can feel comfortable saying, okay, that this company it's going to give me a return on my money. Yeah. So we should be using our checklist that we develop every time we buy a stock, prior to buying the stock.
So developing the checklist, like how do you get that?
How do you develop it? Well, we at Bookworm have developed a checklist of about 5 criteria, and you can develop your own checklist. I'll give you an example. When you think about if you had a company, and you have a company, I have a company. Say, hi, Dorothy. Say Dorothy has a company.
Right.
And Dorothy's company, she is selling a product or a criteria. Let's say she sells plants. So she's selling plants to customers. People are paying her money for her plants. That money, that income that's coming in from her selling those plants, that's revenue. You want to see that this company is generating revenue, and that this revenue is being generated over a certain period of time, like every year. Is Dorothy generating revenue from her plants, from selling her plants year after year? So that means her company is growing. So one of your criteria can be, is my company growing?
Growth.
And specifically, are they growing their revenues year after year? Now, there may be occasions like we had in 2020. Everything was kind of shut down. So they might have been growing their revenues year after year. And here comes 2020, and you may see a drop in that revenue. Well, that's okay, because the reason behind that drop was because of COVID. But other than that, in a company that is a quality company that is growing, you should see a positive trend in the growth of the revenue. Not only the revenue, but when a company is making money and bringing in revenue and paying their bills, what's left over after they paid their bills would be their earnings or their profit. So not only do you want to see a growth in their revenue, but also in the earnings. So that's one of the things that we ask ourselves, especially when we're in our investment club meetings and we are looking at stocks. That's the first question. Is this a growing company? And I'm going to give you another example. If you look at, we're going to bring up a couple of companies here, guys. Company A and Company B.
So let's look at Company A. Yeah. Here's the first one.
Okay. Can everyone see this?
Hopefully so.
Hopefully so. This is Company A. So this is an example of a company that you'd be pretty positive that that this company is going to make you money. Let me orientate you. On the vertical axis is the money that this company is making. And the horizontal axis, you have the years,
Mhm.
2018, 2019, and 2020. Now, remember we said we ask ourselves, is this company growing? Is a company growing the revenues? The blue bar chart, and it's an example of the revenues. And as you can see, there is a positive upward trend every year with regards to revenues. So that company gets a thumbs up
Mhm.
when it comes to growing. The little red line there kind of represents the earnings. Now, you may, every year it's thicker and thicker. It's getting higher and higher and higher. So not only is this company growing its revenues, but the company is growing its earnings too. So this is the kind of company that you can feel good about possibly making money in the future. Now, you know, that whole expression, past results is no example. It's not an indication of future results. That is true. But at least you want to have something to go on. You want to have some history in what this company has done in the past. So this is company A. This would be a company that I personally would feel comfortable investing in because it meets my first criteria.
Okay.
As compared to company B.
So
let's look at company B.
We love technology, don't we?
This is company B. So what do you think about company B? You see an upward trend here in revenues. It started out 2018, 2019. Oh, it's going. And then 2020, it comes back down. Well, yeah, that's significant. But remember, we had COVID. So we might keep that in mind. COVID might have affected this company, but I don't think this is a company that I would invest in at this point. I would want to see what it does the next year. But the other significant thing is this. Look at the earnings represented by the red bars. It's negative. So this company's not making money. So I would definitely feel very uncomfortable putting my money in a company whose chart looks like this. Because it goes back to that criteria. Is this company growing? No. It's not. So even though this company may be on your watch list, there are other companies on your watch list that you can go to. Definitely not this one.
Not this one. Yeah. So we just hide this one from the screen then?
Yeah, you can just put that one away.
Everyone gets it. We run from whatever this company may possibly show you.
Well, and once again, the major reason behind that is because the earnings are negative. It's below zero. So definitely not a company to even think about investing. In fact, honestly, I would take this company off my watch list. Because it's either representative of a company that is maybe just starting out. So it's got to show me more that it can produce the earnings, and those earnings need to be positive. And that takes time.
Yes.
I don't have time. I need to find companies that are growing. So once again, one of the things on your criteria, your checklist should be, is my company growing its revenues? Is my company growing its earnings?
Those are the two keys.
Those are the two keys.
Those are two, but you mentioned that there were 5.
Well, yeah, that will come along. See, these are the things that we learn in our investment club, because we analyze stocks in our investment club, every meeting, because we meet every second Thursday of the month. And one of the things that we do is analyze a stock. So we go through our checklist. Someone says, I have a company that I want us to analyze. Okay. We bring the company up and then we start that process. We have our checklist. We go through the checklist. And if that company meets at least 4 of the 5 criteria on our checklist, we vote and say, okay, it goes on the watch list. The members in the investment club can choose to take a deeper dive into the company. And if they choose to, they can invest in that company. Yeah.
Someone has a question. Your thoughts on this particular company, U1?
Okay. I've not heard of that company. That would be a company that I would do an analysis on before I would consider buying it, because I'm not familiar with it, because I don't know. One, I want to know, how does that company make money? That's another thing I would want to find out before I invest. How are they making money? How do they make money in the past? How do they make money now? And how are they intending on continuing to make money in the future? So since I'm not familiar with, I'll have to start there and then start that analysis, Okay, so if I figure out or find out how they make money, the next thing I would say, okay, are they a growing company? Are their revenues growing? Are their earnings growing? So that would be the next step I would make. So I'm gonna write that company down, though.
Yeah, I got the company right here, but I'm gonna let you write it down. It would be a good one to talk about. But I'm looking at it right now. So the NASDAQ.
Okay. So yeah, that's how I would approach it. That particular company.
Okay. Yeah.
It sounds like it may be a company that's fairly new.
It's fairly new.
Yeah.
Well, employment. Oh, it said it was founded in 1980.
Oh, then it's not. I just not heard of it. That's all.
Yeah, it's called Urban One Inc. Urban One Incorporated, Class A. That's U1. So it's Urban One Media Company.
Oh, it's a television?
Springs, Florida. Primary operates media properties targeting African Americans.
Oh,
this is a good one.
Okay.
I like that she brought this one up. So
well, that may be one to look at.
Yeah,
definitely. I just never heard of it. That's all.
And I'm gonna be honest, I didn't either until she. Yeah, thank you. So we need to look at this.
We need to look at that one, because that may be a potential company to analyze and to go further than just looking at the revenues and the earnings. Yeah.
Yes. So that would be great in the membership, like to going through the analysis of the company and everything. That's what you do in the
our investment club.
In an investment club.
Yeah. The investment club is not the typical type of investment club. Most investment clubs, just like our family investment club, we pay dues. And then out of that pot of dues, we buy companies. With the Bookworm Investment Club, what we do is we want to help you to build your own personal stock portfolio. And so that's what we help you do. We don't collect money into a pot and then buy stocks like that. Yeah. And I'm there to help to guide you in order to do that. So when we meet, there is an agenda and we follow the agenda. And based on the agenda, you can decide if you want to invest in a company.
Okay.
I see some questions here.
This is a good question. What are your thoughts on fractional investing? I know we've
Oh,
talked about this
yeah.
before.
I mean, that is a way to
Always
get
good.
started.
Mhm.
I am quite aware that the stock market can be very expensive. And even though people think that you need a lot of money to get started, you start with where you are.
Or-
And when we talk about fractional investing, instead of buying one share of a company, you may buy just a partial share. If you have $50 to invest in a company whose stock price is $250, guess what? You can buy that $50 worth of that company.
Mhm.
So fractional investing is an excellent way to get started.
Mhm.
There are certain brokers that allow you to do fractional investing.
Mhm.
So it is definitely a good way to get started. And then you can work yourself up to buying one whole share. Yeah.
And for any of you Robinhood users out there, it allows you to do fractional shares if that's
Hmm.
a platform you invest with. It
Hmm.
does allow you to do fractional shares.
Now, TD Ameritrade does not allow you to do fractional shares, but I know Fidelity does,
Hmm.
and Charles Schwab will allow you to do fractional investing. So if you're interested in fractional investing, those are two brokerage firms that will allow you to do that: Charles Schwab and Fidelity. Fidelity is called, I think, Stocks by the Slice.
Okay.
And I forget what Charles Schwab is, but yes, definitely look at that, and don't let that stop you from investing because you can't afford to buy an entire
Higher
share
share.
of a company.
Hmm.
Excellent question. Yes,
Yeah, and you should be consistent with it too,
that's
until
right.
you get that full share, if that's your goal to
Hmm.
build in that area. Yeah.
Hmm. In fact, when you are investing in dividend growth stocks and you decide that you want to reinvest that dividend, when you reinvest that dividend, you're actually buying fractional shares of the company.
Hmm.
So that's the way dividend growth investing works. If you decide to
Absolutely.
reinvest your dividends back into the company.
Company. I noticed that I didn't have that in Robinhood the other day. It's like, wait a minute, I didn't say, oh, the dividends for some of the stocks I haven't automatically have them reinvested into.
Because you
Yeah,
can either have it reinvested back into the company or put it back into
into
your cash account.
cash account. Hmm.
Hmm.
Come
Okay.
on.
Do you think the quick money potential with meme stocks like AMC are worth the risk? Personally, for me, no,
No,
no. That
we
that
did
is
a
not the way that I invest. So,
yeah, we did a we touched on it a little bit from
mhm,
my experience with GameStop and Robinhood.
yeah.
So I kind of got lucky, but thanks to Dr. Marsha, she's like, no,
If you're
get
gonna,
out.
well, if you're
She
going to invest
explained
your
it.
money, and I know people make money like that. There are
Hmm.
all kinds of ways to make money in the stock market. That's just not a way that I would teach someone to invest. And that's not a way that I would encourage people to invest.
Hmm.
But like I said, people do make money like that.
Hmm.
I don't.
Yes.
But and I don't just, I don't tell people how to invest, but quick money, no,
No.
no. But you know what? You can trade stocks. I can't say I trade stocks
Hmm.
also, but my whole thing is investing. I like investing better than trading stocks because I like to keep my stocks, hold my stocks, make look at my stock, make money, and then eventually be able to use that portfolio to live off of.
Love. Hmm.
Hmm. but that's the way that I make money. Okay.
Oh, any other questions?
Any
That
other
was
questions?
a good one too.
Yeah. Any other questions about our checklist? Now, once again, the checklist is this. We just talked about one question on the checklist tonight. There, you as you start to invest, you will develop your own checklist, and we can talk about another criteria the next time because it's about 6:30 now, and I don't like to hold you guys for a long period of time.
Mm-hmm.
But remember, one of the questions that you should have on your checklist is my company growing? Specifically, is the company growing the revenues and their earnings? Mm-hmm. So if you guys are on our email list, I send out a little mini version of a stock analysis. And one of the things I talk about is this is a company that is growing its earnings and growing its revenue. So make sure that you are on the email list so that you'll be getting our review of certain stocks.
Mm-hmm.
And we've been doing it once a week, kind of stopped doing it, but we're going to pick it up again. Because I want you guys to get used to starting to analyze your stocks before you invest in them. Mm-hmm. Don't rely on what someone else says about a stock.
Exactly.
Yep.
Yes. Gotta take control of your own portfolio.
And build your own portfolio based on what your knowledge is and not what somebody else is. Okay. Dorothy, you're not getting the emails? Okay.
If you're not, the website, go to Bookworm Investment Club and sign up there. When you guys go to the website, I believe we still have the ebook. It's a free ebook. It goes over the basics of investing. Mm-hmm. That'll put you back into the system, so you'll get those emails if you, for some apparent reason, have been not getting them. They could have fallen into your spam folder, or considering the time we're in right now, technology is having its fun, but it'll be back to normal.
Yeah, so definitely go to the website. When you sign up to get the ebook, you automatically are on the email list. Cool. Mm-hmm. And if the ebook is specifically for new investors, it kind of goes over how the stock market works. It goes over a little bit about the language of the stock market, and it's a free ebook. Mm-hmm. So take advantage of that. Go to the website, bookworminvestingclub.com. There's going to be a pop-up about the ebook. Mm-hmm. Sign up for the ebook. You'll automatically be put on the email list so that you will get our emails, because the emails that we send out, very informative. You get a lot of information from those emails. Yes.
Mm-hmm. And she does most of them video format, so you guys can check out here on YouTube and make sure you check out. I know we're on several different platforms. You're watching us from Facebook and YouTube, but especially Bookworm Investment Club's YouTube channel. She does her videos on different stocks and give you guys more knowledge. So we like doing these investor chats for you guys, but we don't want to keep you too long either.
Oh, Dorothy said we froze.
Oh, we froze? Well, hopefully we unfroze and I hope we did.
Okay. Well, anyway, we're going to finish up. It's about 6:30 now. Anyway, I want to thank you guys for coming to our investor chat. The next one will be not next week, but the week after next. And we'll pick up and talk about another criteria that you should have when on your company checklist. Mm-hmm.
We'll see you.
Thanks for being here. Have a good evening.
Bye, everyone.
Bye.